So my name is Jim Strang, and I serve as the chair of the board at HgCapital Trust. So HgCapital Trust is a publicly listed investment company who invests in private market transactions, and specifically in the vertical of software and technology-enabled business services. In terms of current positioning, it is very much as it was for us. So the strategy of the company is to invest in private businesses that fit those sector definitions that I discussed earlier. We actually target 8 clusters within those sector definitions, so it's relatively concentrated into what it does. And the premise of it all is activity, which is all an enabler to efficient business. So the tools that the companies that we invest in provide help companies be more efficient at what they do. And you find them in sectors such as tax and accounting, payroll, treasury, all core business functions, basically. So the investments are all targeting companies that enable these core functions to operate in a more efficient way. And that's been the same for many years and has not changed at all in the last 12 months. In terms of any changes to positioning, I would say effectively none. The model, the whole premise of our model is to make it something that repeats. So we actually try and follow the same processes and investment strategy reasonably consistently, or actually very consistently, because that's how we get better at what we do. And that has actually helped drive the returns that have been created, which have been attractive. So nothing really changing. I'd say evolutionary wise, things that happen under the hood, if you like. We're fundamentally invested in software. So we're very thoughtful and spend time thinking about the opportunities and risks around things like generative AI and how to integrate those into our investment decision making and into the companies that we invest in. That's obviously a hot topic and something that a lot of time and attention has gone into, but it's really just been as part of the consistent strategy. It's not a new thing in any way. It's just a topic that we spend quite a bit of time thinking about in the world that we live in today. In terms of recent performance, results for the year from the company are, I think, pretty good. We've seen our net asset value per share go up by 11% over the course of the year, and the share price by 26%. So that is a good performance, certainly from the shares, and I think NAV performance is also attractive in the context of quite a challenging market, because we are fundamentally affected by the M&A cycle that prevails, because that's what we do. It's a natural cycle for us. And that was obviously much more subdued in 2023. So the fact that we've managed to generate the NAV growth that we have is actually quite good, I think. That sees the company up to 2.3 billion sterling of net assets and a market capitalization of just around 2 billion. So we're obviously at scale. And in terms of the sort of underlying flows, I would note that we actually managed to send quite a lot of capital back to the company this year. So 324 million pounds of cash returned, and just under 74 million invested. So we had a great year generating liquidity for the businesses that were in the portfolio. And again, not only that, but I think what's very heartening is that normally when we sell businesses, we sell them above the value that we hold them at. And again, if you look at that statistic for this year, the average uplift against our previous holding value was around about 25%. So not only did we do a good job liquidating portfolio and selling assets in a tricky market, but we actually sold them at a reasonable value above where we were holding them at, which I think is really good from the sort of perspective of validating our model. And if you think about it at the year end, we have, because our model is based on commitments to new structures, we have about 1.2 billion sterling of commitments outstanding for things that we've said we will do in the future. And we have about 625 million of cash available to fund at the moment, which is very much in line with our long-term funding model. So I think we feel like we've had a decent year, some very notable exits, but also we're actually pretty well placed for the next 12, 24 months, given the way the balance sheet has been managed. In terms of a couple of investments, let me go with one in and one out. So in terms of a new deal, I'd point to G Treasury. So you may recall from previous interviews like this that one of the thesis that the manager is trying to follow is what's called the office of the CFO. And that is effectively all the different tools that a CFO needs to manage the function in a large corporate. And as the name suggests, G Treasury is one of those businesses. So this is a thematic investment that aligns with the tax and accounting vertical or cluster that we target and we have a significant amount of exposure to. So this is very much rhyming with A, the thesis, and B, investments that we've made in the past. And so this is an investment that's been made by the Mercury Fund of HG, which is the smallest of the three, but aligns very well with a long-term thesis that they've been working on for a number of years and have had a number of successful investments in. So it's just a really good example of consistency of approach. And then the other example I'll give you is on the opposite side. So this is on the exit, a business called Assets, which is an accounting business, basically, accounting services business, which was our liquidity event was created in the year where the HG was able to return all their investment and retain an ongoing interest in the business. And I think what's good about that was this was not easy. So this was a great example of the private equity model where this business had significant headwinds and actually a lot of resource, time and effort was put into actually improving the performance of this business. And that ultimately has yielded a really good outcome. But it's just a great example of what you can do when you're in control of a business and when you have the capability to actually drive performance improvement and deliver it, and then time the moment that you exit to optimize the outcome for your investors. So that's exactly the story of Assets, and it's kudos to HG for doing it because it's a great example of the model. So in terms of outlook going forward, I think the drivers that sit behind the business are actually broadly consistent. So in terms of what we solve for, what the company solves for, it provides capabilities to allow companies to be more efficient and effective in what they do. And I think that's a very clear secular trend. So I think we're in a good spot with that. And in terms of the market opportunity going forward, I think it's a very large market and it's a truly global market. So I think the number of opportunities that the business sees actually is significant and doesn't go away anytime soon. I think also with our model, it's a flywheel effect. So the more we do, the better the results are. The more we see, the more we do, the better the results are. So by having this focus that we have in terms of strategy and approach, that flywheel is actually a pretty powerful machine and continues to spin. So I think the business is as well placed as it could be to be able to take advantage. The thing that obviously has a bit of an effect one way or the other is the underlying M&A level, and which is driven by macro factors, which are obviously have a degree of volatility, which we saw in the beginning of 2023. However, I think we're in a better spot right now, and we saw a pickup in activity in the second half of 23. And I think the view of the board is reasonably confident for the year ahead, but we're also of a healthy degree of paranoia. So we'll keep that paranoia factor nice and high so that we don't do anything that we shouldn't do. But I think overall we're feeling pretty positive about the year ahead. If you would like to find out more about the activities of the company or indeed HG as the manager, then please visit the website, which has been newly refreshed this year. And please also click the link in the file here, and you can follow through to our materials. Thank you very much.